Hello, everyone, and welcome to my channel. So, today I want to talk about the interest rates, right? So, I think for a very long time now, there has been talk in the market about the Federal Reserve actually cutting the interest rates, right? So, to me, a lot of these talks that you see on video, on TikTok, or on Twitter, right? They are all just speculation without any backing. So today I want to show you the reality, right? What really happens, or what causes the Federal Reserve, right, to change the target interest rates, right? So before I begin, let me just caution you that all the things that you think you know, you can throw away, including things like inflation rate, CPI, PPI, employment, right? All this doesn't matter when it comes to the Federal Reserve changing the interest rates, right? So today I will show you what actually happens, right, in the past and how the interest rate is actually set, right? So if you look at this chart that I have over here, it's actually the United States 3 months government bond yields, right? So that is the candlesticks, and then you have the target interest rates. One is the upper bound and one is the lower bound. The lower bound is the blue color one. So over here, I will show you that actually why the Federal Reserve is always behind the curve, right? So they are always following the 3 months government bond yield. So how do you read this chart? So let's begin from 2022, right? It doesn't matter where you go from. You can go historically, right? Once you have the setup. But let me show you what actually happens. So if you see that there is a move up, right, this kind of a stepping chart, right, you just need to look at the left of this chart, right, and especially on the upper bound, right, you will see that actually the 3 months rate has already moved, right, and once it has moved, then the Federal Reserve will actually raise the interest rates. So for since 2022, this is what happened, right? You can follow this just before the rise in the interest rate. It has always been a move in the government bond yields first, all the way, right? And why didn't the Federal Reserve actually cut the interest rates, right? Even though like, inflation is high and everything, the reason is because this rate itself, if you look at this, right, over the since 1 year ago, right, rate has actually reached this range. Sometimes it move up, but then it always comes back down. So if I change this chart to a line chart, you can see that over here actually sometimes it actually closes above, but most of the time it stay within this range. Okay, so this is the reason why we need to look at this 3 months treasury bond yield. And over here, right, I want to point out a very significant development, and that is if I put in a trend line, a horizontal line over here, you can see that since what last year July '05, sorry, 5th of July 2023, rate has this 3 month treasury bill bond yield has never went down below 5.345, right? It has always been staying above this. And but over here we actually saw a breach on the 12th of July, right? And it has actually, I mean, it tried to move up, but then eventually over the past few trading days, it has convincingly moved down, right? So this major development tells us that there is a chance that this yield will actually fall below 5.25, right? Only after it fell below 5.25, right? Will and it must be before a another meeting, FOMC, right? Then there will be a cut in the interest rates, right? But if it stays here all the way until the FOMC, there will not be any rate change. Now we have been looking at this from a rising interest rate um, period. So let's move to the period where they cut in the interest rates, right? So over here you can see the same. Price has already start moving down before they actually cut the interest rates. And what is interesting is actually over here, right? For those of you who are in the market at this point in time, 2020, you will know that these two cuts are actually emergency cuts. They are not part of a regular FOMC meeting, right? So this actually also proved to us that if the rate went down too much, the Federal Reserve will actually even announce uh, a interest rate cut that is unscheduled. Okay, so in order to determine whether we will be seeing an interest rate cut, let me just reiterate that it will be because of the 3 months government bond yield. So the Federal Reserve is always led by this yield. Thank you.